5 mistakes investors make going into 2025's bear market. What is happening? What do the most common mistakes happen in the world of stock market investing? What can you do to make sure you are not the person that's involved with this? How do you learn to make money when the bear market is rocking and rolling? Well, you come to the right place right here, right now, at the best financial channel, Barry Charles. Welcome back, guys and gals, to the channel. Hope you're having an amazing day out there. Let's get to it. What shouldn't you do in the bear market? Well, here is 5 mistakes that you will try to avoid so you can become financially free. Let's get to it right here, right now. And the first mistake out there that a lot of people do, and it's one of the most common mistakes out there, is panic sell. So yes, panic sell. What is panic sell? What does this mean? What happens in panic selling? Basically, when the world's ending and people think there's no hope. That's the best way to put it. The possibility of this going to zero is all doom and gloom out there. People think the stock market is never going to return again, and people sell off all their assets and wait for another time to bring it in when it's probably gone up another 10-20%, or they just disappear altogether forever. So yes, so when the stock market is crashing, it might drop 20, 30, 40%. Stay calm and relax. Look at the fundamentals of the company. Are they still good in a good financial situation? Are they dropping down? And the best thing to do is not to sell off. It is to wait. Let all Wall Street sell off and you go buy, take the money, thank you very much. And you can see the opportunities out there. But sometimes you have to sell. If a stock is going to finance have changed, Foot Locker's done that before, they cut the dividend and all that, that's when you can look at selling a stock. When the financials change and they've gone from positive, and woo, negative growth. Sometimes they can bounce back, but a lot of companies don't when they go on that slide and negatively and really drop down negatively. It can be bankruptcy for these companies. Not always, but majority of the time, the company won't even get back to where they used to be. So that's the question mark you have to think about when you're buying into any stock in terms of panic selling. So what should you do instead here? Wall Street, obviously, and this time in the bear markets, they often sell out and they put it into bonds, treasuries, maybe real estate, where they think they can make more money. And that's when it's the best time to always buy, because the rich people eventually get in and often are slow to the market. They make a little 5% gain, but you can make 50%, 100% gain. That's where the differences in the money schemes or things for the lower player. You can make a lot more money than the rich investors. Not in terms of dollar value, but in terms of percentage value, you can make a lot more money going forward. So that's one. So panic sell. Do not panic sell, folks. You know you can do better than that. Let's move on to number 2 on this list here. The mistakes that people do is trying to time the market. Yes. I am a big advocate of, I think I can time the market. Well, you're sad to think you can. But in the true sense of the word, no, but I am a believer that when there's a bear market, you can buy. Don't necessarily time in the market in terms of you think, this price of a stock is $10, it's not going to go any lower. Most of the time it does go lower. But what you need to do in this sense, so basically what this is meaning is that you think what the bottom level of the stock market is going to be, what the highest level is for buying and selling. It's not a great strategy, but there is a strategy within that strategy, if you understand what I'm talking about, that you can time the market, but not exactly time the market. So this is the way I look at it. Say you see a stock, I'm going to say SoFi, for instance, at the moment, to give you a good idea. You bought the stock at $5, $6, and then it jumped up, and now it's starting to come back to about $11, $10. It might start skyrocketing again. This is a prime example of a stock where timing the market, you can think, oh, yeah, it's going to keep going to the moon, and then it drop back down. The stock will go back up again. So what, in terms of timing a stock, buy to a certain price. That's basically the way you make the most money in the stock market is stopping at the right price. So if a stock goes from $6, now I'll swap over to Palantir to give you an example, a similar stage. $6, you bought Palantir at $6 and you thought it was worth $50, it skyrocketed back over to $100 and you said, hey, what am I doing here? Sell. Yes, sell. You could sold it there, taking some profits when it went even above 100, and then you still reinvest that into another stock like SoFi, in instance, and look for more return in the long term. Still, Palantir could go to 500, could not, but it sort of depends on what you believe the true value of the stock is currently and going into the future. In terms of so in terms of timing the market, no, you can't time the market, but you can definitely have an opportunity to buy and sell earlier than the bottom and earlier than the top, but just understanding your flow, understanding your process of how to do it. I try not to sell if possible, but sometimes you have to sell. But best things to do, just continue to buy. Sell a bit of your stock if it's high flying, and we're going to talk about it shortly in one of the other mistakes, and then just do it again. But let's continue and let's rock and roll with this channel and look at what number 3 on this list is. Yes, number 3 on the list for you folks at home in terms of where to make your moolah. High risk speculating stocks. Yes, this is where you can make a big mistake, but also I have a little bit of a query that this could be the one that you could actually make some money on during a bear market. So some investors are tempted to shift into high risk stocks as other stocks are crashing. They want to buy the high risk stocks, which could lead to which can lead to them going to more and more losses and the company going bankrupt. Like Beyond Meat is an example of a stock that was in that sort of territory, was at $200 and then whoo, down to the floor and pretty much close to bankruptcy, if not soon rather than later. But I would be stunned if them recover back up to $200 again. But that's just an example of the strategy not working. But I wanted to give you a strategy of how a high risk stock can make you money. How do you do it, folks? This is how you do it. You got ones like Palantir is a prime example, was losing money. Tesla as well, losing money. But they were consistently getting better. And before it even got the profitability, there was signs every quarter they were getting better. This is the time to buy. Obviously, if you bought early, it's even better time to buy, but it's a lot more volatile. But if you know that the company is getting to profitability in these high risk stocks, and the general Wall Street are not into it yet, that's when you just buy, and you can 100, 200, 300%, even 1,000 your stock if you buy into the right stocks at the right time. Often to make those real big gains, you have to buy early before this profitability. But to have a more certain and less likely to lose your money strategy, this is how you do it in the high risk stocks. You just find a stock that is slowly, gradually getting towards profitability, and they're starting to get more towards free cash flow and all this stuff. This is when you start to really get into exciting times in terms of potential times to buy into this market. But yeah, that's how you potentially make money in this sort of in this high risk strategy. Now let's have a look at number 4 mistake that people do a lot of and all the time, is which is quite common, is overselling in the short term. So they overreacting pretty much. They've seen mistakes happen in the stock. Something's happened with something. The CEO is leaving, something like that. It can be danger signs if it's a real top CEO, but it's just an example. CEO is left, stock goes down 20%. The new CEO comes in, who was the COO or CFO or whatever, and next minute the stock goes back up and it's back to where it was. So when you're looking at this overreacting to a short-term news scenario, to give you an example of, there's countless ones, but Facebook, Meta, it's a prime example. It was doom and gloom. This company was going to zero, it was at $80, or had a lot of bad news in a short amount of time, and then skyrockets back up to $600 and beyond. So This is something you need to look at when you're investing into any stock. Make sure that you're not overreacting to the short-term pains, because it can cost you in long-term gains. If you sell out and don't go back in, when often it's the right time to buy, and just invest. It's a good time to really buy into a stock when you can. So yeah, if there's any little short-term news, it's not actually going to affect the company long-term. Just buy the dip, folks. As simple as that. Just buy the dip and you will live a great life. And number 5 mistake, and the last one that people tend not to do, is not rebalance their portfolio. Yes. So what does this mean, not rebalancing your portfolio? Basically, I want to make it a simple example because I'm not big into diversifying. You have 5 stocks and you put, say, 20,000 in each. You got 100,000 initially invested in each one. And one stock goes boom, say it goes up to 80,000. So it's just put you all out of whack. And you want to keep your portfolio similar up to 2020 each. Do you sell 60%? Well, not 6%, 60,000 profit, and then invest into the other ones that are lower, or invest to make it all, so went from 20%, and then you got them all up to 25% by selling from that one and buying into the other ones that are lower at the time. That's a good way to rebalance the portfolio if you're absolutely happy with these stocks. But, by question mark, with the rebalancing of the portfolio, it's only rebalance into stocks that are going to continue to give you future growth. Because there's a lot of stocks, and Apple is a prime example. Doesn't mean they won't turn it around, but you can be holding on to a stock like Apple, which I used to own, for a long time and not see profits. Well, not huge profits compared to like Palantir. Meta has done it recently, especially in the last 4 or 5 years with Apple, just to give you an example, or last 4 years to say, not really giving you much profit. Doesn't mean it won't into the future, but in terms of actual financial wealth, Apple's more of a solid stock, not going to make you a trillionaire, billionaire sort of stock right now, unless they find a way to find the next iPhone, which at the moment this company doesn't even look like they're in QE, are looking to make changes to the way they're just trying to stay steady and in the race and actually going backwards a little bit. So that's a question mark over there. So basically, what's the 5 key takeaways to take out of this video? Don't panic sell. If your stock is going lower and the financials are right, you've done the right fundamental work, you just buy. Do not take in what the short-term news is, folks. Just run away from the short-term news. Just again, another chance to just buy the dip. High-risk stocks, potential buys if you find the ones that are got a lot of accelerated revenue growth and the improvement in the net losses continuously over quarter after quarter. Good time to buy into those sort of stocks. Rebalance your stock is very, very important as well. And obviously there's one I'm missing here. And the number 2 is, yeah, don't time the market. But you can time in a bear market a good time to potentially sell, or well, really in a bear market you want to be buying into the stocks that have dropped for you, and then seeing it flourish into the future. But anyway, there's 5 stocks, 5 mistakes that people do in terms of the bear market. I hope you enjoyed the video. Remember to like and subscribe to the channel, and I'll be back with another video 2 times a week on this channel. Have an awesome day out there.